Praise the Lord. And so this next hour, we're going to have two presenters that are going to share on some crucial information on owning land, all right, owning properties. And so, and even just general financial information that will be helpful, even if you're not looking to purchase, but you just want to get things in order. And so the first presenter is Paul Khani. He's someone I've known for several years. Myself and Pastor Jennifer, we have known him for several years, and we have actually done business with him. He is someone that I send family to, so I think it very much appropriate that we would invite him to come on the line. He's a mortgage broker with Patriot One, or a mortgage banker, I think, with Patriot One Mortgage. And he's going to tell you a little bit more about himself and give you some information that will be very helpful, even if you're not thinking of owning property, because some of us are not thinking it because we don't think we can. So without further ado, Paul, are you there? Did I put you on mute? I hope I didn't put you on mute, Paul. Let me see. I think I did. Let me see. I think this one is. No, that's not you. Paul, press 4* if you're on mute. Let me see. 516, maybe this one. That's you?
Good afternoon, Pastor Jackie.
There you go.
Can you hear me?
Yes, loud and clear.
Good afternoon. I'm so glad that I'm a part of this conference. Thanks for the invite. I'm looking forward to give some information, as I've been listening to your conference. It's very informative, very, everybody needs the blessing of the Lord, so hopefully I could help out and give you some insight into purchasing, refinancing, and buying, properties. So let me give you a little introduction about myself. I've been doing this close to 30 years. I've been in real estate and mortgages. Currently work with a bank, Patriot One Mortgage Bankers. We're actually a direct lender, so we kind of do our own processing, underwriting, and closing. So pretty much when we pre-qualify you for a loan, when we look at your information and give you a pre-qualification, we do from step one to closing. So you're going to get a loan if we give you a pre-approval letter. So a little bit about the introduction. So I've been here, as I said, about over 30 years. Home buying is one of the biggest purchases of everybody who's buying wants to in their lifetime. So it's very important to make sure you understand, how you could buy properties, how you could refinance your property if you own a property, and these are the very key issues. So there's always a lot of myths that, if you want to buy a home, you need a lot of money. You need 20% down, 25% down to purchase them. That is not true. There's a lot of programs that you could purchase a home with no money down. Yes, still with no money down. If you're a veteran, there's programs that you could purchase the house with no money down and no closing costs. And FHA programs, there are different type of programs. FHA is for first-time home buyers, and you could purchase a home with only 3.5% down. So if you're looking to buy a home with 3.5%, so if you're looking to buy something around $500,000, you only need about $17,500 for the down payment, and they allow you to have the closing cost financed in the property, so you don't even pay for the closing costs out of your pocket. There's also conventional programs. Those are for people with better credits. You could still buy a one family with only 3% down. So the myth that exists that you need to put down a big chunk of money to purchase a home is not true. So that's one of the first things I like to tell people. Do not listen to people that tell you things like that. Give me a call if you have any questions. I would explain that to you. I will be giving my information down the road, so you guys have all the information to write down. The most important thing in purchasing, you want to get pre-approved. What is a pre-approval? Pre-approval is basically we look at your income, your asset, and credits to pre-qualify you for a loan. So when you do start looking to purchase a home, when you start going to a real estate broker to find a property, you have something that you know what you're approved for. So therefore, you're not going to be wasting anybody's time, wasting your time, or wasting the broker's time. And therefore, when you go with a pre-approval letter, you know exactly what you could afford. And when you give an offer, your offer is much stronger than somebody who does not have a pre-approval letter. So I encourage everybody, get your pre-approval letter, and we do that here at no additional cost. There's no fees you have to pay us. We review your income, we review your assets, we review your credit, and tell you exactly what you have to do to qualify for a loan. So what do we look at when you want to get pre-approval? Income. Income is the first thing we look at to see what your incomes are. Unfortunately, if you get paid cash, some of those programs, won't qualify for. We can't use that income. But most people have, they have a salary job. They have, get Social Security income. They get maintenance. They get adoption income. Those are all incomes. We could use all those incomes to qualify you. And for self-employment, usually you have, we look at the net income. That's the most important thing that I tell people. We look at not your gross, what you showed that you took in, but we look at after your expenses how much you made for. So that's the first thing we do, look at your income. The next thing that we'd like to look at, I should say, which is as important as income, is your credit. Credit is the most important thing in this. I would say even more important than asset, how much money you need to buy a home. Because if your credit is not good, it's going to be a little difficult to purchase a home. So what I look at your credit, and I could tell you what we could do to help your credit. Sometimes people, their scores are low. People talk about credit scores. Why is your credit score low? Sometimes it's because of having high balances. Most people don't realize if you have a credit limit of $500 and you use $400 of that credit balance, it brings your score down. And that's very important. So you make sure that your balances, you paid in full, or you've tried to get an increase in your limit, so therefore it does not hurt your credit score. And what I usually tell people, if you're looking to purchase a home, do not try to go and get a car loan. Do not co-sign for anybody. They're asking you, hey, listen, we need to get a house ourselves, or I need to get a car for myself. Can you help me out? Because that's one of the biggest things I see sometimes. People don't realize, I'm not making the payments. Somebody else is making the payments. But you know what? There's a payment on your credit report that you're liable for, and we cannot give you a mortgage if that's going to hurt you in the long run. So make sure you look at your credit. We review it. We tell you what you have to do to increase the credit scores, if possible, or how to pay down your balances to increase your credit score as well. But again, if you're looking to purchase, do not co-sign or purchase anything big at the moment, okay? The last thing we look at is your asset, the money. There's two things you need to know about when you're purchasing a home. You need a down payment, which I told you could buy with a minimum down payment of about 3% to 3.5% down, and also closing costs, which usually runs around 4 to 5% of the loan amount you're borrowing. So, but again, the closing costs could be financed. Some of the programs allow you that you don't have to pay the closing costs. It could be financed into the loan, so there's no money out of your pocket for the closing costs. So technically, you could purchase a house with only 3% down, and the closing costs rolled into the program. Again, as we look at the income, as we look at the assets and the credit, these are the three main factors that we look at, and to get your pre-approval letter. So therefore, you could start looking for a property. And as you know, the market is very hot at this time. So if you're having a pre-approval letter and going to a broker and they know you're already pre-approved and you're ready to go, they will give you more attention and will give you let you buy a property much easier than that. The other thing besides purchasing in this market, which is people are taking advantage, is the low interest rates. So therefore, you could also refinance. So most people, I don't know, realize that you could refinance your loan, your mortgage. I don't know if a lot of people have mortgages with very high interest rates, and you could lower it to very, very low rates at this time because the interest rates are very low. And sometimes what happens is you have high credit card loans that people could do what's called a cash out. You take money out of your property since you have some equity on it, and refinance the loan to one loan and pay off all your high credit card loans. And that's very important as well. Again, this is with no money out of your pocket. You could refinance, get rid of the high interest rate, get rid of your high credit card balances, and at the same time, most people know sometimes you have mortgage insurance. So if your property has gone up in value, you could also get rid of your mortgage insurance on your loan as well. So basically, about purchase and refinancing, that's what we do here. We're a direct lender, and we could help you in either one. But if you give me a call, I'll be more than happy to discuss everybody's specific scenarios, because not everybody has the same scenarios. Everybody have different scenarios. Some people have better credit, some better have more income. So we could discuss and see what's the best scenario for you to qualify for either a purchase or a refinance. And I'm going to give you my number if you want to take my number down. My direct cell phone is 516-852-1677. And my name is Paul. And my last name, Connie, Khani. And as I said, I work for Patriot One Mortgage Bankers. And we're a direct lender. So we could help you in either transaction, either purchase or refinance, that could help you out. And I'm going to open the lines. I guess Pastor Jackie and Pastor Jennifer, if you could help me out with that and see if I could answer anybody's questions that might have at this conference.
Okay. Give me a minute, Paul. I'll take them off. I think it's easier to
Conference unmuted.
Okay, just make sure you're managing your lines, please. Okay, are there any questions?
Could you repeat your telephone number for me, please?
Hello. Anybody needs information, myself or Pastor Jackie will be able to give it to you. So we don't want to put a lot of time into having repeat that. Both of us can give you that. If you just bear with us, we're watching time. Anyone wants his number, myself and Pastor Jackie has it. We could give you after the conference.
I'm going to post it on the chat. I'll do that.
That information go for the Canadians.
You heard that, Paul?
I didn't hear that. No, what happened?
He said, we have some folks from Canada on the line, so he's asking for information goes for the Canadians.
We have all over the world, huh? This is a world conference.
International, yeah.
I'm glad to hear. You guys are great. I'm glad that you guys are helping all your fellow members, you know?
Amen. Praise God. Any other questions? Any other questions for Paul? Hello? Any other questions? Paul?
Yes, I'm here.
This is nothing related to what you just spoke about. But we have a system here where we monitor the conference with a dashboard, and we're able to label the names of those who are on the line. And so I have Sister Regina helping me, and she has you labeled as Brother Paul. And it just dawned on me, for all these years I've known you, that your name is Paul.
Oh, my God. Isn't that something? Brother Paul.
Brother Paul Khani, yes, that's what she has you.
As you know, Jennifer and Jackie, we've done a lot of loans together for your friends, family, and I've always appreciated all the referrals, and I always do my best. You know, I'm try to be very straightforward to give the correct answers, good or bad. Sometimes you have to tell the truth, you know. Sometimes people come in and they can't qualify, so I always tell them the truth. We're not charging anything up front to give them the right answers, you know. So you're going to post my information. Anybody wants to call me, I'm more than happy to discuss it with them and give them the right information, so if they're looking to purchase or refinance, they know what they have to do.
You know, Pastor Jackie, thank you, Paul. I received Brother Paul. And that's a name that, oh my goodness, that's a powerful name. Paul, you carry a powerful, powerful name. So I embrace you as Brother Paul, and pray someday you will walk into that role. But I just want to say, if somebody is already looking into purchasing a house, I just want to tell you I can talk from experience. It's not every person that you sign contract with, or glory to God, or with your attorney, and you go to the bank, and it's not everybody who take your business can close you. But I can attest, glory to God, that this man will, if long as you can qualify, he can close that deal and you will have your purchase, you will have your home. Because again, there are people out there that will take your business and do all kind of stuff, and you will wait forever, and they just can't close the deal. I know people who physically do that and people who physically went through that. For months you're waiting to close on your home, and they can't close. They don't have the ability to close you, and they're not telling you that. But that will never be the case with Paul. If he takes your business, you can be assured, as long as you're qualified, that your loan will be closed and in a timely manner. I just want to toss that out there.
Yes.
Back to you,
Yes,
Pastor.
Yes, and I don't mind throwing my own self under the bus, Paul, because there were a couple of years ago I decided to use somebody else to spread the love and not Paul, and I ended up having to run right back to Paul. Thankfully, he did not hold a grudge, and he took me back with open arms, and we were able to close the deal. So yes, like Pastor Jennifer, I can attest that he gets the job done. And it's not just business. Paul and I have become friends, and I really appreciate that about him. He really takes care of his clients, and I can attest to that, Pastor Jennifer, as well. I have a question, Paul, from someone. I guess she's too shy to ask. She says if she wants to purchase in another state, can you be qualified then? Or I guess can you do the qualification for them?
We're only licensed in New York State currently, so if you're looking to purchase in New York, I could help you only in New York State. But I do have some associates in other states, if you're looking to, that I could refer you to the same way I was referred by Sister Jackie and Sister Jennifer. I could refer you to if you guys are looking for other states.
Pastor Jackie, I have a question as well.
Mm-hmm. Go ahead.
Could I go now? Okay. Paul, how wise it is for, let's say, with the market as it is now, let's say someone has a house that value, because it blooms so much, especially in New York, that the house values, let's say, $900,000. On the mortgage that's left to be paid, that's owed on the property, is probably, let's say, $150,000. Is it a wise decision for that owner to take some of that equity out of the house? We're talking about refinance now, and purchase another property. Would that be a wise thing to do?
That's a great question. Yes, if you have that type of equity, and you find a good investment that you could do very well with, 100%. This is the best time to do it, with the rates being very low. This would be the right time to purchase something, because you're pretty much getting a loan at such a low rate. It will help you out. And then you could invest that property, and you could be having a cash flow coming in, that you could be making extra income every month in your own pocket. Then, because if you have an equity and it's sitting there, you're pretty much not getting any kind of income coming in. But if you take that money out, purchase something, you could turn it into a cash flow on another property at a very low rate. So, yes, to answer to your question, 100%. It's a great thing to do.
So, it's thank you. Well said. So, it's pretty much just echoing what you said, really, that it is a good thing to let the equity in your house work for you in terms of having it bring you extra income. There's a lot of people that are afraid to take the equity out of the house for all different type of reasons, and that's why I asked that question. And again, I'm glad you said that this time that we're living in, because of all that's going on, the interest rates are so low that it is indeed a good time for people to take some of that equity out and invest it. Now you have the original property that value $900,000. Now you put it into a second property and make sure that will have the rental to cover the mortgage payment. And that next property is going to also increase in equity over the years. So before you know it, within a number of years, now you'll have equity in the property, have another 5, 6, 7, 8, 900,000. Before you know it, you're looking at $1 million or over. And I look at it as a way where people can easily become millionaires over the years if they do stuff like that. So I thank you for that answer and affirming that it is a wise thing to do.
And I just want to follow up on that. Sometimes you do have a small loan amount, but then you have all these high interest rate credit cards, and I don't know if people know about these interests on these credit cards. Sometimes are 18, 20%, 24% that you have, which you're paying, and you're never paying it off. So the other thing you could do is refinance, take the cash out and pay all those high interest rates off, and you get one small loan payment, which is amazing. You know, it saves you a lot of money over the years. So that's very important as well. You know, so be careful with that. And as I said before, there's times a lot of people don't realize their value have gone up in their home. So if that's gone up, and you're still paying your mortgage insurance on the home, there's ways to refinance and get rid of that mortgage insurance. Mortgage could be $300-400 a month that you could get rid of and lower the rate at the same time. So therefore, your savings, I have people saving $800, $1,000, just refinancing and getting rid of the mortgage insurance and lowering the interest rate. So take advantage of this time. You know, these times don't come around all the time. You know, the rates are going to start going up again, as you hear every day. Everybody's talking about inflation, and in order to get rid of inflation, they're going to start slowing down and increasing the interest rate. So if you haven't taken advantage of it, this is the best time to do it.
Anybody else? Thanks the Lord. Anyone else?
Good afternoon. Yes, Pastor Jackie. Good afternoon. Please some peace. This is Stephanie. Hello?
Yes, go ahead. Just speak up a little bit. You sound very...
I can't really speak up. I'm in my classroom, but I'm going to try to. My question is, what is the difference between a fixed rate and adjustable rate, a mortgage rate?
As you said, the fixed rate is basically when you get a loan, the rate does not change. So you have most loans are 30-year mortgages. So the interest rate you're going to be paying over the 30 years, the rate is going to stay the same for the next 30 years. In an adjustable rate, that's not the case. You might start with a rate, but it could adjust every year or depending on what is the term on the loan, and it's going to be changing every year. And as rates go up, that adjustable rate is going to increase as well. I mean, sometimes adjustables when the rates come down, on the adjustable, the rates come down. Well, most of the time in this market, I would say, since the rates are so low, I would tell people to get a fixed rate, not an adjustable rate, because adjustable rates will be fluctuating, and since the rate's going to be starting going up, I would not advise somebody to take an adjustable rate.
Right. And what is the average loan processing time?
We by the time we take an application, we usually get you approved within 3 to 4 weeks. You have a loan approval, and about 4 to 6 weeks you have a closing. So, but the most important thing that I will tell everybody is get pre-approved. When you come in, let's make sure I look at your income, I look at your credit, I look at your assets, and have you pre-approved so we know when we start the application, there will be no issues in delivering your commitment and closing.
Thank you.
Did that answer your question?
Yes, somewhat. Thank you. Yeah, you shed some light. Yes. Thank you.
Thank you.
Anybody else? Good afternoon. This is Sister Rickett. Good afternoon. How low are we talking the interest rates are now on refinancing? I have a 3.65. Can I go lower than that?
Depending on how your credit is, yes. I mean, the rates on single families, we've been closing around 2.875 to about 3%. So, yes, definitely you could lower your interest rate. Do you also pay mortgage insurance on your home or no?
Yes.
So if you're paying that mortgage insurance, if your house has equity, we could get rid of that mortgage insurance at the same time. Not only lowering their interest rate, but also getting rid of their mortgage insurance. Plus, what you could do, I don't know if you have any credit card debts. Do you have any credit card debts or other loans, second mortgages, anything like that?
Not much, no, not much.
No. Yeah. But as the sister Jackie and Jennifer were saying, you could also take some money out if you wanted to. Maybe if you want to do some repairs in the house, fix something that you're waiting for, because the rates are so low, I would even tell you to do that. But these are the things we could all discuss, and I could tell you what your payment's going to be, and see how you feel and how comfortable you are to take that next step.
Okay, great. Thank you.
Of course.
Okay. All right. Okay, so for time's sake, thank you so much, Paul. We have your information. I know folks are probably going to be contacting you, and we will help them with that. But in the meantime, thank you so much. This was very, very informative. And
yes.
So we truly appreciate you taking the time out of your busy schedule to be with us
Yes.
In this conference. So God bless you, Brother Paul.
Bless you, Brother Paul. Everybody say bless you, Brother Paul. Thanks for your advice. Thanks for your advice, Brother Paul. I speak to my pastor. God bless you, Brother Paul.
Okay.
Thank you.
Thank you, Jesus.
So next, Pastor Jen, you want to do the next introduction?
Bless you, Brother Paul.
Yes, all right. So there's usually a 3-step move that you make towards purchasing a home. The refinance is one step, just going to the bank or the broker. I don't encourage people going to your local banks. They're the hardest to get you what you want. And you go to people like someone referred you to as Paul and others like him. You're 99.75% be sure to get what you want. But the first step is either you're going to a real estate agent to help you find a house, or you know somebody who's selling the house. So your next step would be to with your attorney, and you get your contract from the seller's attorney, and you sign the contract. And the next thing you go to Paul, like he said. Let me back up a little bit. When you first go into the real estate, you need someone like Paul to give you a pre-approval letter. Most people don't want to even show you anything unless you have a pre-approval letter, because they don't want to waste their time. And so once you have done all that, and I used to think, if you're like me, that I'm looking at someone like Paul to know if I'm going to get the mortgage or not. Come to find out, there's a person with a title that's called the Underwriter, and he mentioned something about that his bank having their own underwriter. So we're not promoting a different or another underwriter, but I believe the ministry is blessed to have someone in our midst who this is her business, this is what she does, and so she's going to give us information. I have my pen and my paper. I have a little idea, but I know I'm going to get more than an idea from her as to who in the world is an underwriter, and what can an underwriter tells me that would help me in being prepared to either purchase my house or to refinance my house. And this person that we are blessed to have in our ministry is no other than our very own Minister Joan Stewart. Can we make her feel welcome? So welcome, Minister Joan.
Welcome, Minister Joan.
Are you there, Minister?
Like a welcome.
Welcome, Minister. Yeah, if I was there, I wouldn't feel welcome. I agree, Pastor Jackie.
That did not sound...
Welcome.
That did not sound like a welcome. Praise the Lord.
Welcome,
Minister Joan. Amen.
Welcome, Minister Welcome.
Somewhere under So it's okay. Some are on their job. So
Praise God. Praise the Lord. Praise the Lord. I'm a part of this ministry, so I guess I'm at home, so I guess it's okay. Right? You know what the word says about. You know what the word says about in your own hometown, right? Sometimes. But I'm grateful to God today for the opportunity to come. I thank God for our pastors, Pastor Jackie and Pastor Jennifer. Praise God for our covering overseer, Apostle Dr. Bishop Fritz. I just appreciate these two women of God because I see this ministry as them always looking for ways to give us information, right, to equip us. And we don't often find that within the body of Christ. Whatever they find out, they're so willing, they have the heart to share it. So I really take it as a privilege and an honor to come today with Brother Paul just to give you guys some insight into the mortgage industry. Praise the Lord. As you know, my name is Joan Stewart, and I've been a mortgage banker by profession for over 25 years. I'm a residential mortgage underwriter. I underwrite conventional and FHA mortgages, right? So those are some of the terms you've heard Brother Paul mention. Praise God, the conventional mortgage is just it's not backed by the government. It's not insured by the government. It's just basically a private agreement between you and your lender, right? And the FHA mortgage is the acronym that's for the Federal Housing Administration, and that is a mortgage that is insured by that segment of the government, and it requires a specific designation from that authority to underwrite those loans. And oftentimes you'll find those loans will give you a little bit more flexibility as far as your credit scores and things like that when it comes to home ownership. And Brother Paul advised there are so many different programs. Praise the name of the Lord, and we thank God for someone like him that is alongside to walk you through the process. The word of the Lord, as Pastor Jackie stated at the beginning of this session, is that my people in Hosea, my people are destroyed for lack of knowledge. Praise the name of the Lord. And I've titled this session The Approval Process. And I believe today, armed with the information that you will receive, and if you implement the strategies, put them into practice, then no one from these sessions in the conference should be denied or turned down for a mortgage loan, right? There are several different steps involved in the entire process, from taking the initial loan application to the closing, where you get your keys to your new home. So primarily, whether it's a purchase or a refi, there are several steps. And for this segment, we'll get into the specifics of some of the things that a mortgage underwriter does that impacts you, the borrower, or the customer or member. That is what you'll refer to depending on the financial institution that will finance your mortgage loan. If you go to a credit union, they may refer to you as a member. And most credit unions back in the day, you had to have some banking relationship already to use them. So it's great that Brother Paul is a one-stop shop. I love dealing directly with lenders because they're not having to shop around all different places to find someone that will finance your loan. And some of you may be wondering exactly what is an underwriter. Underwriters can be found in different industries, such as the insurance industry or for commercial purposes. But for this segment, we'll look at the residential mortgage underwriter. The underwriter is the person responsible for evaluating the borrower's worthiness through scrutiny of your credit, your capacity, and collateral. We analyze the documentation to determine risk levels associated with making the loan. Regardless of the type of financing needed, the lending institution is interested in both your personal and business financials if applicable. Our analysis is governed by what we call in the industry the 5 C's. The 5 components that make up a credit analysis, which helps us, a lender, get an understanding of you, the borrower, to be able to determine your credit worthiness. By knowing each of the 5 C's, you will have a better understanding of what is needed and how to best prepare for the loan application process. I'll rephrase the statement and simply state, by knowing each of the 5 C's, you will have a better understanding of what is needed and how to best prepare for the loan approval process. All right, so let's take a look at the 5 C's. And the first C, not in any particular order, is character, which is very important. Lenders need to know the borrower is honest and have integrity. How reliable and trustworthy are you? As history is the best predictor of the future, and without us having any personal knowledge of your background, we examine your personal credit history as a way of determining the type of individual you are. Credit shows us how you handle your obligations. Do you pay your debt on time? What is the balance you owe compared to the limit, to your credit limit? Do you have collection or charged off accounts? Have you filed for bankruptcy? Do you have tax liens? Does the address you disclose on your loan application match what is reported on your address history? These are all things which are reflected on a credit report that gives a picture of the type of person you are. It gives a picture of your character without the lender ever meeting you. The credit report shows your current and past behavior and gives an indication of how you will operate or behave in the future. Very important. So some of these things is what we want to look at when we're thinking about whether we want to refinance or purchase. The other C is capacity. And capacity is simply your ability to repay the loan. We're able to determine your capacity by review of your income documentation. Examples of these documentations are your pay stubs with at least 30 days of year-to-date earnings, your W-2s for the most recent 2 years, or complete most recent 2 years tax returns, all pages, all schedules. Usually tax returns are needed in cases where you may have additional properties, investment properties, or if you're a business owner, then we also want to see your tax returns. Review of these documents help us to determine your income to compare to your debt, which gives us a clear picture of your ability to repay this loan. Your work experience is also evaluated to confirm consistent income. So as a lender, we want to make sure that you have consistent income. If your income varies, then we want to review that over 2 years, and we usually will average that. So those are the things we'll evaluate. We evaluate even pay stubs. We want to evaluate if you have a divorce situation, if you're obligated to pay child support or alimony. Those are things that we want to look at as far as your obligation, your debt. The other thing we look at is your cash or capital if you're a business owner. Cash is just your personal assets. How much of your own money do you have? Do you have any down payment? Do you have any savings? Savings can be reviewed as a compensating factor for some shortfalls in the loan. Many times you're able to look at compensating factors for different things. The only thing no compensating factors is for credit. There's no compensating factor. No matter how much money you have, no matter how stable your job is, if your credit is horrible, there's no compensating factors for those. And the capital is for business owners, which is just how much have you personally invested in the company. And then the other C is conditions, which refers to the intended use of the funds, the purpose. What are you getting the money for? The purpose of your loan. And then another key piece is the collateral. And the collateral is the asset that's pledged to support the loan. And in this case, it will be the property, the house, that secures the guarantees the repayment of the loan. This is what we have in case for some reason you default on the loan, then we have this collateral that we're able to take back. It's the property. The lender will order an appraisal report from an independent party, third party, that will let us know the condition of the house to make sure that it's up to regulations. It'll let us also know what the value of the property is, and how they value that is compared to different similar types of property within a certain radius, depending if the property is considered urban, rural, or suburban. So they'll compare other like properties with similar characteristics to come up with a value. And so we will lend you our money based on the value, the lesser, if it's a purchase transaction, we'll do the lesser of the purchase price or the appraised value. So that's how we come up with what we will lend you. And that brings me into some of the terms you will hear, like a loan to value. And that's how we divide the lesser of the appraised value or the purchase price into the value of the property. So that when you hear they talk about the loan to value, that's what they're talking about. The mortgage amount divided by either the lesser of the appraised value or the purchase price. I heard Brother Paul mention mortgage insurance, right? So a lot of you may be wondering, what is mortgage insurance? Usually that is if you have a loan to value that is greater than 80%, but if you have a lower down payment, then you're going to more than likely have mortgage insurance. The lesser down payment you have, of course, and depending on all other factors, then your mortgage insurance payment will be maybe higher or lower. But mortgage insurance is required if your loan to value is over 80%. So unless you're doing a 20% down payment, yes.
I'm sorry, can you explain loan to value? What does that mean?
The loan to value is your mortgage amount, right, divided by the lesser of the appraised value or the purchase price, right? So if you qualify, more than likely you're going to be doing a loan to value over 80%, right? So say if you're doing a mortgage and your property is, say, maybe you just divide the loan amount. If you're doing a $250,000 loan amount, and the purchase price is $300,000, so you divide that, the 250 by the 300, and it'll give you what your loan amount, your loan to value is. Does that make sense?
Yes. Yes. Mm-hmm.
So in that case, your loan to value would be like 83%.
Okay.
You see what I'm saying? So you divide the loan amount by whether you're using the purchase price. Lenders will always use the lesser of, right? Most sellers nowadays are selling their properties even above what the value of the property is. Mm-hmm. But we will never lend more than what the property is worth. Mm-hmm. People are willing in this market to pay more than what the property is worth, but we will never lend on more than what it's worth.
Mm-hmm. Gotcha.
Does that make sense?
Mm-hmm. Yes, thank you.
And whenever your loan to value is over 80%, then we require mortgage insurance. And usually they have mortgage insurance companies that will provide that. That's a separate thing. Lenders don't really provide the insurance.
So I'm sorry. So just to make sure, because some of us, our math is not that great. So it means like there's 20% like equity in the home that's yours, right? You don't have to pay mortgage insurance.
Right.
Right.
Okay. So like I think it's Sister Ricketts was asking Brother Paul, and so that's what Brother Paul was saying. For if you've had your mortgage a few years, right, and it's good to have an idea what it's worth compared to what you owe. So it gives you an idea of how much equity you have in the property.
Right.
So then you'll know, okay, in Sister Ricketts' case, she said she had mortgage insurance, and Brother Paul, it was worth a conversation to sit with him to see where she is. Mm-hmm. Right now, if she has that 20% equity, it would be in her best interest to refinance, in this market to get not only a lower rate, but she'll get rid of the mortgage insurance come off of her loan.
Right.
Yeah.
That's good. That's good. Thank you.
And I know I've said a lot. Does anyone have any questions so far as what we look at?
Let me release them from mute prison. Okay. Anybody? I'll just do a quick
Conference unmuted. Muted.
Does anybody have any questions? Any questions? Yeah, we have to keep putting you on mute. Okay, any questions to Minister Jones? Anyone? I guess you were so clear.
Yes, clear so far, Minister Jones. We're still listening.
Okay.
Thank you very much, Minister Jones.
So some of the key terms I would like you guys to be aware of as you begin the process, right? You're going to hear your debt to income ratio, right? That is a key thing, your debt to income ratio. And so we look at what you owe in your recurring monthly debt, right? Debts that you're paying on every month, not like your utilities, right? But like your car loan, your credit cards, and I mentioned like if you have other debts such as child support, or even if you have like an agreement with the IRS if you're paying on taxes that you owe. So those will be all added up as far as your total monthly debt, right? And then we calculate that by dividing it by your gross income. So your gross income is your income before any deductions. So, the net is after deductions, but your gross. So we total all your debt. We divided that by your gross income, and that's what that debt-to-income ratio is. Right? You'll also hear something called front-end ratio, and that's simply your principal taxes, insurance, mortgage insurance, and if you have homeowners association fees, that divided by your gross monthly, that's the front end. There's front end and there's back end, and the back end would be the DTI, your total overall debt to income. So those are things you want to be mindful of as well when you're preparing for this process. If you're thinking about it, take a look at what you owe. If you're able to pay off some things, you have installment debts that if you pay them down to less than 10 payments, then they won't include that in your total debt rate to income ratio. So like if you have car loans that are almost paid off, or if you have those American Express 30-day accounts, we usually don't include those in your debt. Depending on the lender, if it's a Fannie Mae loan, then we might require you to have reserves. But those are different kind of products that Paul would be able to go over with you. There's so many different types of mortgages that you'll be able to qualify for. You mentioned if you're a veteran, then that's a VA loan. The FHA loan affords you to get in with a lower credit score. I'm sure most of you guys are familiar with that is, right? So your credit score, we use the middle score. Out of the 3 bureau, we take the middle. If it's only 2 score, we use the lesser of the 2. And if it's a joint application, we're using the lesser credit score to qualify.
That's interesting.
So it's a lot of things in the process. So you just want to, what I would encourage you is, ask questions of your lender, of your loan officer, right? Your broker. Ask questions. Don't wait until you get to the closing table, right? And then your things are falling apart because you don't understand. My daughter is a closing attorney, and she comes home with these scenarios all the time. It holds your process up. You're excited to get into your house, and then you get to the closing table and you're not able to close because things weren't clear in the offset. Because unfortunately, you have a lot of loan officers, and I thank God that Brother Paul doesn't sound to be like one of those. They just rush to try to get you through the process, right? And then you end up with something that you don't know. Get that pre-approval to let you know you can afford this house. Don't go shopping for the house. Because, we go into those big homes and we love these extravagant homes. And then when they look at our income, we can't afford it. And then we're all like down and depressed. So it's best to, get a pre-approval. It lets you know what you can afford so you can go shopping, know.
Yeah.
With knowing what you can afford.
Good advice.
But ask questions. Ask questions. Don't feel like anything is dumb. If you don't understand, ask. Don't be afraid to ask.
Excellent. Any questions?
Adrian?
Any questions?
Thank you, Minister Joan.
Okay.
You're welcome.
Okay. Thank you, Minister Joan.
You're welcome, Evangelist Hayes. I appreciate you.
All right. Paul, is there, I know you're still there. Did you want to chime in on anything? Paul? I thought he was still.
It's a whole lot of information, but anyone have desire to buy, don't let that defeat you. Knowledge is great.
Paul, are you there? Okay. All right, Minister Joan. What time is it? Our next presenter is coming in a half an hour. So, Pastor Jen, I guess we will have some time to do something else during that time that we have for the next workshop. But in the meantime, Minister Joan, that was I tell you, this was such an excellent session between our mortgage bank and now our underwriter. My goodness, God has blessed us. We thank God for the outside relationship with Paul, which I believe is coming inside, and for Minister Joan right in our midst. Such a gem, right? Such a gem. Your presentation was excellent. Thank you. It speaks of the 25 years that you have been in this industry. You speak so eloquently, so clearly, and it was just so refreshing. So thank you so much. Pastor Jackie.
It's Pastor Jackie. It's
Minister have to move to the state.
What are you saying, Minister Sims? I didn't hear you.
I say thank you for that information. Seems as if I have to move to the state.
Oh, you have to move to the state.
No, but the thing is, Minister Sims, regardless of where you are, the process is going to be very similar, right? The process is very similar because if you think about it, the main thing I want you guys to take away from this, right? Because it's not your money, because there's so many programs out there to help you, right? Down payment assistance programs depending on your income. So the money, back in the day when my mom was buying, everybody felt they needed the 20% down. So it's not the money right now. What I would encourage you to focus on is that credit piece, right? Credit gives you stuff that money can't buy. Oh, yes. You don't have the money, but if your credit, that is the thing. And it's not, credit is not just how, paying your debt on time. Credit is also measured by your credit limit to what you owe. So you have to also keep an eye on that.
Minister Joe.
Yes, Pastor Jackie.
Yeah, I was just reminded. I sent this information out maybe a couple of weeks ago that New York City is offering low-income first-time home buyers $100,000 toward down payments. It's a legitimate, legitimate information. I don't know if Paul, if you're still there at all, if you could say anything about that, if you know anything of it. But the information is there. You have to meet obviously a certain income bracket and to qualify for this loan. Not a loan. It's actually they're giving you money to encourage.
They give you most of those programs. As long as you stay in the home at least 5 years, you don't have to pay that loan back, and there's no monthly payment. It's a grant. Okay. They put it on your title, but it's not something. It just helps you to get into that house. So it's really no excuse for us. I always tell people, if you think about it, you're always going to need a roof over your head. Right, you're always going to need somewhere to stay, and as long as you have that consistent income, right? And I was saying this to Pastor Jackie as well. There's another piece to help to take away the fear, because there's more available for you as a homeowner than as a renter, there's no real protection for you as a renter, because if God forbid you lost your job, right, that landlord they want that rent. But mortgage companies have mitigation programs to help you when you say you lose your job or if you're on unemployment. There are different programs available. There's so much to this industry that our people don't really know about. But the information is there. Just, it's just to remove the fear and to ask the questions and just to get you in the place where you can be a homeowner. Set that investment up for your children. A lot of us, that's how you gain wealth, as Pastor Jennifer was saying. A lot of us don't have money like that. But if you can be able to get a piece of property, that is something for you. And just how you manage to pay your rent, you'll manage to pay your mortgage. And New York has a lot of, little moms and pops and Abib and Malik and Jose. They help even if you have stuff to fix, right? Where it's not, you have to be paying all these professionals. But just ask the questions because it's there. I mean, I worked in banking for years before I got into mortgage banking, and I'm like, where was I all these years with this mortgage stuff, right? But our people don't know about it. So just ask the questions.
Okay. Praise the Lord. I also want to add that we were working on having someone who can come in and help build your credit, but that person was not available. But I can say from experience, it is so people can help you clean it up. I remember, I don't know if you remember, Pastor Jackie, or those of you who have been in our past conference, those that were held at FOC Bronx, we had, I believe it's Bishop's daughter, somebody mute your phone, that does that. And I personally had introduced a couple of persons to her, and I watched her change one person's credit from 530 to 731 in 3 months. This person that I sent to her was someone that I knew personally, pretty much all the folks. And she worked with them, and within a 3-month period, that 530 score went to 731. And so I sent somebody else, and I saw the same results. And so I know it can be done. I'm still going to get a hold of this, try to get this person to be available. The person is out of the country once they call me back. And if it's even to set up a special session, because a lot of folks have things, one person I sent to her, the things that was derogatory on her credit report was hospital bills. She had some medical issue, and it was a lot of hospital bills. And she was able to clean them off. She had a lot of credit cards, but there were a little bit of balance here and a little bit, bottom line, she was able to clean them up and get her, I think that one got up to almost a 700 score within the same short period of time. So yes, it can be done. You don't have to sit around with bad credit and thinking that you're dead and it's bad and there's nothing you can do about it. Yes, there is. And even if you're not planning to buy a home, I like what you said, Minister, about the credit. That's our character. Somebody who don't know you, that's what they look at. And so there's so many little things. I have my youngest daughter. I showed her how to gain a credit card. I showed her what to do to get it from scratch, because there's also those, if you have no credit and you start applying for credit, somebody going to tell you, you don't have no credit, they're going to be turning you down. But there's always a lot of credit secrets out there that you can apply if you know them to get what you want. And I teach this to my children, my young ones. The minute they turn 18, I show them how to get their own credit cards. And so my daughter, Princess, is 21 now. She has 2 little credit cards that I showed her how to get them when she had no credit. Again, there's ways to go around it, and somebody going to give you credit, because it's good that they start, the young ones start building from now. I stay on top of her, I sit on top of her, pay your bill, and pay it on time. I said that's the key. And don't use all that they give you. Don't use it all up at one time. Because when somebody like Joan look at your report, she's going to say, this person is in distress. I can't approve this loan. This person is in distress because they gave them $1,000 balance, and they owed about $900 and something. So I can't give them any more bills.
They're living
off
the credit card. Yeah, they're living off the credit card. That's what we say.
Exactly. And for those who are more mature, because my daughter is young, in wanting to build wealth, I also show my daughter how not to have somebody give you a $400 credit card. If you want to build wealth, you don't want that. People send her a card for $100. I tell her, no, don't lie. You don't want it. Throw it in the garbage. $300, throw it in the garbage. You don't want that. Because, and you could correct me, Minister, every person that come behind you going to give you the same $300. And it doesn't build you if you're building. That's if you're building. If that's where you have to start, fine. But if you want to build and go forward in real estate, and someone like Joan pull your credit and see your creditors give you $300 a year and $400 a year, I don't know if she know that you can pay a mortgage for $2,000.
Exactly.
So there's quite a few things that the Lord has blessed me with knowing in these things, and so there's ways around it, and we're gonna get that credit person. Back to you, Minister.
Yeah, we call that payment shock. We look at what you're currently paying and to what you're trying to now say you can afford, right? So we want to look at the payment shock. And so you're right in this, payment shock. It's payment shock.
Okay, great.
Compared to what you have a history of being able to pay $200. All of a sudden, I'm seeing $15,000. Like, wait a minute. Yeah. So you want to. It's not. And also, you can use your utility to establish credit, right?
Yes.
You can have them report to the credit bureau. Your cell phone or you can use those. We won't count them in your monthly obligation, but it can help in your credit as well. So. Yeah.
Yes.
That's good to
Can
know.
I ask you one more question? Can I ask one more quick question? We're gonna get ready to go on Dr. Cummings' time, and I did have a little something for you guys. How important it is that a person pay attention to what someone is offering them that is going to affect their credit. Because a lot of times, a lot of us, when we're doing stuff, I don't think we even think of what it's going to look like on our credit report.
That is, like I said earlier, Pastor Jen, that is very important because credit can get you what money can't buy. Credit can get you what you don't even have the money for. So your credit is something that is very precious. So it's not every offer you want to take, right? And you don't want to enter into any agreement lightly. You want to weigh your options, right? And get into the position that you dictate your terms, right? Even like a mortgage, you have good credit. They want to offer you a 5% because of the way your credit is. You say, no, I don't want that. I want this rate. Right? Whereas if your credit is not good, then you're forced to have to take whatever they give you. So a strong credit report puts you in a position. And now back in the day, you had a 600 credit score. That was like a big thing. Now it's like the credit is up 800. So 600 is like Fannie Mae and Freddie Mac. The minimum credit score is like 620. FHA, I think pre-COVID was 580, right? So FHA a little bit more flexibility. But your credit is a very important commodity that you have. So you want to weigh everything. When I was younger, I was foolish with my credit, right? And some of us made mistakes with our credit. But thank God, we're not as foolish as we were. So you don't want to live as a young, and whatever we learn, you want to pass it on to our kids so they don't make those mistakes. When I was in college, I had no job. I had no business getting a credit card, but they were there on the campuses offering credit cards, and you got no job. You want to make sure that you protect that because that's a very precious commodity that you have. Even if you don't have the cash, but your credit is good, you can get what you need.
Yes. Amen. Praise the Lord. Thank you so much, Minister. Thank you.